it's a big deal. And the ETH ETF, what is interesting to me, we all knew it was going to happen, but now it's happened. I'm really interested to see what narrative BlackRock put around it. What is the narrative of ETH? Because ETH kind of lost its narrative in this cycle for those of us who've been around. We kind of know what it is, but it wasn't winning the narrative game. But they're going to reframe all of this for the public. And it can't be, oh, it's another cryptocurrency, because that's not going to sell. Because people say, we've got Bitcoin. So they're going to have to sell a vision for this thing.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. The SEC has taken a major step towards approving an Ether spot ETF in today's video. Raoul Talks explores the biggest narratives and drivers of digital asset prices, and more. So without wasting any time, let's dive into the video.
I think you're raising a key point is, look, all of us who've been in the financial system know that every single bank and asset management firm is working on this. I mean, Goldman's had a team since 2015. So what they wanted was the regulatory clarity, which is what Fink has forced through.
Yeah.
So the explosion of innovation that's about to happen from the finance system itself, I think, is the shock. It's not going to come from NFTs and all of the stuff that we all do. It's going to come straight from the heart of the financial system. And before you know it, they're tokenizing everything, as Larry said, and they've all been desperate for this. You know, Wall Street will have lobbied for this because it saves so much money. It's like, I keep explaining a story to everybody that I think is super valuable for people to understand. There's a friend of mine was running fixed income, currencies, commodities, and treasury at National Australia Bank. And he's just retired. And I'm like, well, what have you been up to last few years? He goes, I've been building stable coins. I'm like, why? He goes, yeah, in euros, in, you know, Aussie dollar stable coins, euro, Aussie, euro, US, euro, whatever, Canadian, UK. I'm like, why? He's like, nobody realizes, I think it's next week, fucking US goes T+1 equity settlement. FX markets are T+2.
Yeah.
Australia is T+3 because of the time zone. He's like, we're going to have to give tens of billions of dollars to our brokers to settle trades. And that takes from our regulatory capital, and they'll offer us 0 interest rates on it. So we're forced to use stable coins. I'm like, oh, of course. That's a massive use case. I think Canada goes to T+1, and I think, I don't know, the UK and Europe are as well. So that's a big deal. Somebody said, good luck, Elizabeth Warren, in building an anti-crypto army. You're going up against millions of people who are motivated by their own future, the financial future, and they understand the power of memes. It's like, that is very difficult to go up against.
Yeah.
And Trump saw that. And I think the Democrats are learning very fast that, you know, there's 110 million Coinbase accounts, of which, I don't know what's active now, call it 10, 15 million are active, but in the height of the bull market by next year, be 40 million plus. You are not going to piss off those people and tell them they can't have a financial future and win an election. Zero chance.
Bitcoin recently crossed a crucial threshold by surpassing $69,000. This progression, supported by a series of positive news, comes after a prolonged period of consolidation. As the queen of cryptos seems to be gearing up for new bullish attempts, this recent rise raises questions about its sustainability and the accompanying risks. Bitcoin's price reached $69,000, a significant milestone that comes after a series of attempts to break out of its long-standing consolidation. This rise was supported by a series of positive news throughout the week. Despite this surge, market volatility remains palpable. Bitcoin appears to be preparing for another bullish attempt after a slight drop of 3 to 4 days. Investors remain attentive, ready to react based on closures above the key level of $67,900. According to Rect Capital, a renowned crypto analyst, Bitcoin has recently escaped what he calls the post-halving danger zone, a critical period where the cryptocurrency tends to experience significant drops after the halving of mining rewards. Rect Capital explains that although this danger phase has passed, Bitcoin could still experience a correction of around 13% from its current value. Since the end of the post-halving danger zone, Bitcoin reached $71,500. However, this level represents significant resistance in the macro reaccumulation range, leading to a price rejection, he explains. The analyst points out that, historically, Bitcoin always rejects the first breakout attempt after a halving. This reaccumulation phase could last up to 160 days after the halving, which means the cryptocurrency might not cross the $70,000 threshold before September 2024. Consolidation should continue for several weeks, oscillating between $60,000 and $70,000, adds Rect Capital. While history shows that the path to new highs is fraught with obstacles, Bitcoin's recent rise to $69,000 and its exit from the post-halving danger zone are encouraging developments. Still, caution is warranted.
We are all fully invested in the space. So the only capital is rotating from Bitcoin or Sol into ETH. We've seen a bit of that. I think that will continue. By pure luck, I've been following the ETH Bitcoin cross for a while, and we got these new kind of trade idea templates on the Real Vision platform. They're just in beta test right now. And I tested one out on Saturday and put my whole thesis about the ETH Bitcoin cross, and it's exploded higher. So that was pure luck. But I think that there's no new capital coming into the space right now. Now, if we think of it in terms of broader macro picture, the business cycle is only just picking up. Earnings are just picking up for companies. So we're not flush with cash in the real economy. Yes, some stocks have gone up and crypto's gone up, but not all crypto either, as we know. There's been quite a decent amount of divergence as there is over the crypto spring. So it is going to have to come from the ETF. And then it'll be all-time highs is going to be the driver. In fact, all you need actually is Bitcoin to hit all-time highs, then Sol will go, ETH will go. I think that brings NFTs alive. It brings alt season. It recycles capital. It brings those 80 million dead Coinbase accounts back into activity. That whole great cycle that happens in crypto summer and crypto autumn is yet to play out. I mean, don't forget, we're still basically in the middle of the pandemic when we go back to the last cycle. We're not quite, we hadn't really started anything yet. Bitcoin was just breaking 10,000 after having consolidated. So the most overused phrase in crypto is we're so early, but we're early in the cycle. So yeah, we just need fresh capital. Liquidity, there was a liquidity withdrawal I think we talked about it last week because of the tax stuff. We'll see liquidity starting to come back in. Yellen should normally inject about 250 billion of liquidity. Now she's had the tax receipts in. Before you know it, now there's less QT, liquidity comes in, it all starts happening. So patience, I think, is the answer.
Michael Saylor said the SEC's approval of a spot Ethereum ETF benefits Bitcoin by increasing institutional investment. The chairman of MicroStrategy, Michael Saylor, has stated that the approval of a spot Ethereum ETF by the United States Securities and Exchange Commission, SEC, is beneficial for Bitcoin. According to Saylor, as a result of this permission, the cryptocurrency market will see an increase in institutional investors. Saylor discussed his opinions about the digital currency. According to Bitcoin Maxi, the spot Ethereum ETF approval will provide investors with increased trust as well as options from which to select what they want. Saylor claims that the clearance will legitimize the crypto asset class, which exchange-traded funds, ETF, specifically support for Bitcoin and Ethereum. This move officially acknowledges cryptocurrency as a class of asset, with Bitcoin leading the way. Saylor's latest stance, which marks a significant departure from his previous position on any digital currency other than Bitcoin, is particularly noteworthy. In response to Saylor's unsuccessful prediction against the approval of spot Ethereum ETF, a large number of individuals on X trolled him. Saylor's classification of Ethereum as a security, which occurred just a few days before the SEC's judgment, was the source of the fury within the internet community. Saylor noted that the acceptance of Ethereum ETF will boost Bitcoin's status within the cryptocurrency market. This is something that some people believe to be an ego check. This is beneficial for Bitcoin. When we have the backing of the entire cryptocurrency business, we gain a lot more power. Ethereum, which has a large user base, offers an additional degree of protection for Bitcoin. In addition to this, he suggested that standard investors might start to see cryptocurrency as a genuine asset class. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.